Good morning and welcome to Coffee Break Accounting with me, Becky Brooksbank. If you haven't already grabbed your cuppa of choice, then feel free to press pause here. Head to your kitchen, grab your cup of tea, coffee, soft drink, whatever it is, and come back and join me for 10 minutes or so of jargon-free accounting support for your business. So we are on series 3, and series 3 is exploring everything beyond the profit and loss account. So if you've had a look at some previous series, you will notice that we have explored the profit and loss account in detail so you can understand the profitability of your business. We've looked at setting up simple systems, and at the moment we are going for all those other reports and really important things that you need to know about for your business. So we've been exploring the balance sheet. So that this is another essential report that tells you so much information about your business. Okay. And in order to break it down, we are doing a separate episode on all the key elements of the balance sheet so you can really understand how to apply this to your business. Last week we looked at fixed assets, and your takeaway task was to go away and create your fixed asset register if you hadn't already got one. This week, as I said last week, we are starting to look at cash. So in your balance sheet, there is a separate heading. It is one line, and as I'll show you in a few minutes, that literally says cash. But for me, this is the most essential part of understanding your books and checking that all your transactions are right and your bank and your business financials are valid. So we're going to dive in and have a look at cash for now. So when we are talking cash, I'm just going to minimize this down a little bit. When we are talking cash, what do we really mean? Well, cash can cover a number of things. And actually, when you say cash, you think automatically of the physical cash that you have. But actually, cash in the business just means any monies that the business holds. Okay, so let's think about this. You will have current account where you hold your money. Now, I'm just going to divert slightly here. I wholly recommend that everybody has a separate current account for their business banking. When I say that, I mean keep personal from business, okay? So self-employed, you're very often will grey this because they will have one bank account and everything for the household and everything goes into it. And it's really difficult to differentiate between the two. So I would always recommend to have a separate bank account. Now, if you are self-employed, there is no reason this can't just be a standard personal bank account, another, open another Lloyd's account, Santander, whatever that may be. When you become a limited company, the banks will eventually figure out if you're using a personal account and request you switch to a business account, mainly because they get their charges and everything, but also because you'll be put in a business relationship, hopefully put with a business relationship manager. So when I say have a current account, just keep personal and business as separate as you can. Okay, slight diversion then, but honestly, one of the top tips I can say for keeping your books straight. So what other cash balances will a business have? Well, they'll have funds in savings accounts. So you might be one of these people doing profit first and have 8 different bank accounts for different things. Or you might just like to put your VAT and your corporation tax or some self-employed tax away until you have to pay it. Then don't forget, you've got things like till float. So if you're a retail or a shop or anything else that has a till, you will have your till float. That is still part of the business. Petty cash tins are common, holding 100 quid, 200 quid, whatever it might be for odds and sods that you need in a business. That is still part of the business money. Safes. So if you're a bigger cash handling business, you will have safes which may have a significant amount of cash within them. And then also, if you regularly send money, get cash collections or anything else, then again, that cash in transit still needs to be taken into account, because if it's left your safe but hasn't made it to the bank, it's still your money. It's just in the transaction at some point in time. Okay, so when we're thinking about cash balances, we've got to think about all of those together. Okay, Now, I'm going to throw a bit of accounting jargon in there for you, in here for you. What is reconciling? Okay, so you will hear, if you do some reading, do some Googling, everything about banks will always say reconcile your bank, reconcile your bank, reconcile your bank. But what does actually reconcile mean? Okay, so what reconcile means is taking your bank statement and matching each line, each in and out to a transaction. Okay, because if somebody's paying you in, it's got to have come from a client, or some other form. It could be a grant or it could be a donation, whatever it is. That cash is coming into your business for a reason, so you need to understand why. Okay. Similarly, if it's going out, you might be paying a bill, paying your staff, paying your taxes, whatever that may be. There is a reason, or there should be a reason for that transaction happening. So when we say reconcile, not only do you have to reconcile bank accounts, but I've also put movements in cash holding. So your petty cash tin, for example, you might have £200 at the end of the month and £150 at the end. Where's that difference gone? What have you spent that money on? Okay, and it could be that somebody added some money up and then you've taken some more out. So there could be ins and outs. So reconciling is the process of going through each of these transactions, either in your bank account or in your physical cash holding, and making sure that you've recorded each of these. Okay, so your ultimate aim at the end of every month, as a minimum, is to check that your bank statement equals your accounting system balance, and that your physical cash holding equals your accounting system balance. Now, when I put accounting system in here, I don't necessarily mean the likes of your accounting software, okay? So, the most obvious accounting systems are Xero and the likes. But if you're not at the stage where you have Xero, you will still have some kind of system in place. So it could be that you've got an Excel spreadsheet that you're working on, okay? Simply by, I say, must equal your accounting system, that Excel spreadsheet that you're keeping track of everything on should agree back to your bank statement. And if you've got cash, you'll have another tab and that will agree to your cash holding as well. So here I'm not implying everyone has to have a full-on software accounting system, but your ultimate aim is however you keep your books, those balances have to agree. Okay, but why? So here I am saying, what is reconciling? You must do it, but why? Okay, so let's think about this. You've got to ensure everything is correct. Every transaction, near enough, through a business will come back to your bank at some point. You raise a sales invoice, they pay you, goes through the bank. You get charged a bill by a supplier, you pay it, it goes through the bank. Okay, so all the transactions stem from the bank. So for small business owners, or for any business owner personally, your key to understanding and ensuring that your financial statements are right is getting your bank sorted. If your bank doesn't agree, you've got a problem somewhere. Okay, so by reconciling the bank, you're validating all of the data. So you're making sure you have supporting documents for each of the transactions that go through the bank. Okay. That then, in turn, ensures that your financial information is as up to date as it possibly can be, okay? Because if you've got, the bank statement is very rarely, I do not know anybody who has had a bank statement come in from the bank that is wrong. It's rare banks make an error. So if you're reconciling to something a third party has generated because they think it's right and you agree, that is the best information that you can possibly have. Okay. Accurate tax reporting. So if you keep on top of all these things on a monthly, weekly basis, whatever it is, when you come to do your tax return, you'll have all the transactions sorted. You'll have all the supporting documentation sorted. You'll be happy that the data is valid so that it's correct. So your tax return will be so much easier, and also so much more correct. So you won't be missing anything. Why else? Okay, so reconciling your bank ensures you understand your cash flow. If you're looking at it regularly, you'll understand what's coming into your bank, what's going out, and also what commitments you've still got to make. And you'll know what your cash balance is. Another good one. And then the last one is you can control theft. So think about your risk of fraudulent transactions. Okay, if you're going through your bank statement and you see, or even your credit card statement, because that, you know, kind of is an element of cash in there. If you're going through that and you spot something that shouldn't be there, you can flag it sooner rather than later. So you can raise an inquiry with the bank and say, look, I don't think I spent this. What is it? And get on top of that. Similarly, if you've got employees and you've got a cash tin and or a till or safes or whatever, if you're regularly checking that, you're reducing the risk that somebody is going to steal from you. So not only is reconciling really important as part of the business to get the financials right, it also has these ancillary benefits as well. Okay, so for me, reconciling 100% one of the processes you should be able to do in your business. Now let's think about John Tapp. Okay, you know, for those of you who follow Coffee Break Accounting and any of the workshops I do, John Tapp, our resident case study plumber, makes an appearance quite a lot. So John Tapp is going to sit down and do his books. Okay, he doesn't really like doing them, but he's going to sit down and do them. The first thing he is going to do is get his bank statements out and tick off all of the transactions that he has going through his bank statements to the pieces of paperwork to support them. And he's going to update his accounting system. Okay. Now, John tends to like to do his once a month, and quite often he'll try and persuade his wife to do it. So that's what she'll be ended up doing. But John always makes sure that he has good habits and reconciles. Now, as a rule, John doesn't take cash because he has quite beefy invoices and doesn't want to be carrying around shed loads of cash. So he only really has his current account and his savings account to look at. But if quite common in construction, retail, etc., is to have his physical cash, if he did, he would be ticking that off and counting that at the end of every week to make sure that he's included all his transactions. Okay, so that's John and that's his process. Now, what this then means is once he's done his cash reconciliation, his financial statements will start to come into place, and that'll look like this. So the balance sheet, which is what we're working our way down, we looked at fixed assets last week, which we haven't actually got them on this particular balance sheet example. But if you can see here, the cash is just one simple line. But when John adds all his cash together, he's going to add his bank statement balances for his current account and his savings account together. Okay, and that will become his cash figure in his balance sheet. So that one little line there is, for me, one of the most important figures in your financial statements. Not because it just means that you've got cash and that's a good thing, because your cash flow isn't a problem, but it also means if you're happy with that cash figure, a lot of the other balances will naturally be right because you are happy with your cash figure. Okay, so I cannot tell you how important it is that you have a look at this. So that leads me to your takeaway task. Your takeaway task for today is to go away and reconcile your bank account or accounts. I would put in here and your physical cash, but I didn't want to scare you all off. Let's do one little thing at a time. Okay, so again, remember, reconcile is just matching each transaction off to a physical paper receipt and then allocating what type of expense it might be, or whether it's an income, put it into your sales category. Now, for those of you who haven't, just bear with me 1 second. I seem to have a child just nipping in the back of here. I'm just going to... Oh, nope, he's gone again. Apologies for the little disruption. We were just about to finish. Where was I? So yes, for those of you who haven't set up your accounting system and you're a small business, I have got an easy bookkeeping template that you can download and start to use straight away. So it's an Excel template which basically takes you through reconciling your bank. So the whole point of the tab is you put your opening bank balance in there, you do all the movements in and out the bank, allocate them to which cost or sales transaction heading you want to, and then your key is the last line of your bank statement as per Excel in your accounting system has to agree to the actual physical cash in your bank account. Okay, so the easy bookkeeping template does this step for you, helps you through the reconciliation. So head over to type the link in your internet browser below, and you can get the easy bookkeeping template to download straight away. So that's reconciling. Obviously, if you're using accounting software, it will have the different ways of doing it within there. And I am going to write a blog on how to correctly reconcile your bank account as well. So keep an eye out for that. Thank you very much for joining me this week for our cash section. Next week, we're going to look at accounts receivable, where we will understand everything there is to know about your amounts you are due from your customers, how to look for bad debts, and the type of ratios that you might use from that. So thanks for listening today, everybody. Have a great week, and I will see you next week for episode 6 of Coffee Break Accounting.